Good morning, everybody. Pretty quiet. I guess the calm before the storm, maybe. Um, Big Tesla earnings turned out to be a non-event, but there were so many more coming. Things have to start moving here, I think. Um, so S&P's up against this prior high, made a little peekaboo new high there this morning. You can see little breakout failure out of a consolidation, came right back in again. So an initial rejection of well, I shouldn't say initial rejection because it started yesterday near the close. You can see it was getting close to the close anyway, where things had popped up there, and there was a rejection at that point, and all the markets came crashing back down, little micro crash, not short amount of time, but by the dip right off the low there again. Look to the left, back up, and a little getting closer to that level. So anyway, yesterday the SPX got close. SPX was actually 4194. So here, getting as the futures now getting close, and they held its support. So we got pivot low, pivot low. We'll see if that holds, whether it breaks lower. Other pivot lows down below before hitting the void. So S&Ps, they'd have to go down here below those lows. It would open up the door to lower. Now, one of the things that we've been seeing a lot in this market, especially intraday, is breakdown failures because of the buy to dip mentality, even intraday, where you get these breaks. I'll kind of look at yesterday there, break down below those pivot lows, which historically would lead to a 1, 2, 3 continuation pattern, some type of chop, and then further drop down to the next support. But nope, wide range bars crashing down through prior major support, jiggle around, right back up again. So, we all know at some point this is going to come to an end. Maybe it's going to be the May, go away in May scenario this year. We shall see. This pattern of the red, green, and push up here, just slow plotting, wide range bars that are a little bit of range expansion bars compared to what was previously happening. Mentioned yesterday, this kind of wide whippy ranges typically do not ignite major moves. Major moves historically come from calm periods or some type of a failure pattern. So we shall see. Wait and see. Stay out of the chop. But you know what? What we reviewed in the green room yesterday, with a lot of help from John, threw out a lot of stuff out there, and we scanned some things, and a lot of beaten down stuff forming bottoming patterns. So while the broader markets may not do much, and maybe even some of the leaders, there's a lot of patterns out there that are to bring up the rear type of situations. So Zynga is one of them that we looked at, and there are others, but there's a lot of these stocks that haven't participated much or even went down during this rally period and have been chopping sideways over the last month or so that look like they can go higher. So keep an eye on that. We talked about this doji type bar on the weekly time frame, which is a stalling momentum. Keep an eye, of course you will, if prices start to break lower, whether they go below this low, because that would be a short-term topping pattern. YM was the real dog yesterday. The Qs were in rally mode intraday, but the Dow was, scroll back here if I can do that, down, down, down. Other markets were holding up or going higher, and they did absolutely nothing, and they're just slopping around here. But, daily pattern overall, uptrend, sideways mess, and, a little room to the downside to test the lows if that's in the cards, or you know, just if it hangs here near the highs as more earnings come out, maybe it could break out. And this is what I'm talking about with getting quiet. So yesterday was a quiet day. I don't know. We'll see what today turns out to be, but a few quiet days. And when we talk about correction patterns, one could be where even today was to poke lower, but then turn into a bottoming tail bar. So a rejection of the lows by the dip again, of course, but a break of a low and a pop back up again could be a pattern that things could move higher from. So, when things are choppy and going sideways like that, there's a lot of wait and see, looking for new information. Qs rallied yesterday. They were moving up, and not the best power kind of a rally, not at all. But compared to other places, they were doing well, and they came right back there after that drop in the afternoon, and the same little rejection of the highs, normal, coming up to the prior high and getting rejected in the short term, no damage done. You can see the attempt to break lower came right back up again. So just continued chop running in place going on here. Now the Russell had a decent day. We were looking for that and got up to the prior pivot high, looked to the left, pivot high, congestion, expected to stall. It's exactly what's happening. So now we'll see what it does here. They can chop around and then potentially move up toward the prior highs. Bonds down a little bit, so interest rates up, but trading inside the range, more running in place. That was a 30-year. There's the 10-year. Choppy, down here at this support, and I bounced off of it. Didn't get very far. So it'll be interesting to see. So far it's an inside week, but whether it can get above last week's high or below last week's low. So set alerts and see which way things go. Gold up a little bit. That came down pretty hard too. And a little sideways, trying to make a little hook turn there up against some resistance and a downtrend on the weekly. So out of sync, multiple time frames out of sync, but trying to get it together. Silver, similar, well, not downtrend on the weekly, sideways chop, but trying to get turned up. Overall, looking at the broader markets and, these other sectors, gold, silver, oil, overall, everything is just chopping around, waiting for something, more news. I guess the earnings, of course, as far as equities go. But markets are just chopping, a lot of chop sideways here. So, just being aware of that, maybe trade a little smaller, use wider stops, just stay out of the frog in the blender we talked about yesterday. Transports, new all-time highs. So, that's a big positive. As long as they keep doing that, I mean, it's grinding. It's what we call a self-correcting uptrend. They're relatively narrow ranges. It's just a grind, but it's a positive that the transports are holding up here. Whereas if we saw, the other broader markets chopping around, not really going anywhere, and the transports had broken their area of major support, but the other markets are holding, that would be viewed as an early warning sign of trouble to come. So no early warning signs of trouble to come from the transports. And our internals, not telling us much of anything. We looked at them yesterday, they're neutral. Now this is inching up toward a bearish level, and this is inching up. So one of the things to be thoughtful of would be prices breaking out of this range. Who knows, Apple earnings or whatever, there's tons of them coming out, that spikes this up into a bearish area, which we'll make you aware of if that should happen. But um, coming into May, the story, we do get a spike up. It could be a short-term high, a break, and it would be confirmed if we saw a breakout failure, if that was the case. So breakout failures aligned with bearish internals are high probability patterns. So until we see something that breakout failure, breakout continuation, correction bar that says it's going higher, or just a breakdown, the expectation is that we're going to see more chop until proven otherwise. So, not much to add to that, but it is what it is, as we say. And those bottoming patterns are where, part of my focus is going to be always keeping an eye on, the equity futures to see if they set up. But some of these bottoming patterns look pretty interesting. All yours, Dan.
Wow, never thought I'd heard you say that. Bottoming patterns looking interesting.
Well, that's how desperate things are, because bottoming patterns, Dan, as you know, can be wonderful at the right time, and they can do so well. But at the wrong time, exactly the same, that they can be treacherous. So you got to know what you're dealing with, and of course, we both do. But it's really, an example or proof of what we're dealing with right now, that it's kind of like a bring up the rear. And I'm one of the concerns, as far as breakout failures and bearish markets go, if it goes down, starts to break down, it'll be better, I think, for making money anyway in the short term. Markets don't go up forever, and when they go down, they tend to go down fast. But money rotating into what has been the dogs, and well, things have been going up for a while, historically, is a sign of, we're getting near the end of a rally. So just more to keep in mind.
Alrighty. Adjusting IBB. We have the put spread, looks good. So just adjusted the put on this. Well, talking about bottoming patterns, we did a put spread on this the other day. It's acting great. And now it's close. And that's seen that, hey, this would be a fantastic example, Greg. Why don't you comment on this right now? Tomorrow, MT Live, relative strength weakness. IBB was the better one, obviously, because these pivots were higher based upon this bounce and taking out that prior high above the 20 MA. So that one's stronger. But in terms of a new trade opportunity, I like this one better. This one, it's the catch-up trade to 145.
Yeah. So, the thing with those, as I said, at the right time, and maybe this is the right time, since, biotech has been an underperformer this year. They did great last year. So playing catch up, maybe it gets through that pivot high to the left. But, it spiked up there yesterday. So with this kind of a pattern, I'd like to see a little sideways action at that pivot and then continue up. It's got the 50 MA rolling right over the top of its head. So, as far as an entry point right here, I'd like to see something else than entering it today, because otherwise, where am I going to put my stop?
Yeah, I saw this thing gapping up, so let's go ahead and tighten the stop. Well, we're 26. There was a bunch of earnings, but I cut out a bunch of them just because they were junk, nothing to do. Let me go through them here. Get this cross posted for subscribers. And then we're off. And this also has earnings in 2 days for us, which is why we got to keep a tighter leash on it. And Thomas Plug and Solo. It's a bottoming pattern, but it to me, it doesn't have enough of a something something. You know, you got these nasty railroad track 20 and 50. Now we recently did an MT live on bottoming patterns, and we talked about we need some type of event that says, aha, I'm not going down any further, gap reversal, bottoming tail, wide range igniting, etc. It could be the start of it, but for me, I'd like to see more. Identical. They could be the bottom. So it's just a function of on a scale of 1 to 10, and who are identical. You all are giving me bottoming patterns. But this one, I have no idea if this is a consolidation and a downtrend. Well, it is let me rephrase that. It is a consolidation and a downtrend. That's what it is. We're talking about, is it ready to go from a sideways trend to an uptrend? And that's where I need more. I have no idea on this one. We did a put spread on AMC. This was another bottoming pattern. MA's flattened out, breakdown failure, higher low, volatility getting really tight. And then yesterday we had a gap breakout. So this, I like AMC a whole lot better. McGraw PII, MMM call spread, 140. Yeah, 30-minute low. Sure, 30-minute low. Triple M, yep, absolutely. 30-minute low, go through the checklist, on earnings. Typically, unless it's something really liquid like Apple, Facebook, Microsoft, typically minimum you got to wait 10 minutes for spreads on earnings stock to get at least tradable, but many of them probably 30 minutes. OLED WRB on daily. It is, so it would be okay for a put spread. Put spread, I like yesterday's close for this being a short-term bottom. For directional, so it's in a fat rating range. I got flat 20 and 50, and I don't have a real big price void. So day trade, I like the 15-minute a lot for a day trade. CLOV. Now, see, that one's a little better as a bottoming pattern because I have a retest. I have a wide range igniting. I got huge volume, and it's working on a pivot here. So then this would be a higher pivot low. The 20 MA is curled up. So of the bottoming patterns that you all have given me this morning of the 4, this one's the best of those 4. And we're getting a little gap up today. Yeah, AI is on our list. Yep, we actually already have a put spread. Look, another good example. I didn't have my something until this bar. Now it's getting its sea legs back, the 20 MA flattening. So this is also a better one than some of the others we talked about. And I have a nice 15-minute uptrend and it's gapping up. We already have a May put spread on this. But I mentioned in the green room yesterday that, yeah, it's also now a directional watch as a bottoming pattern. Let's continue here, close. Tesla, obviously earnings last night in the news. And Debbie's not here, but Debbie asked me yesterday, Dan, do you all think that they're going to beat estimates? My answer was, yeah, I do, Debbie, because people have been just guiding lower, so there's a higher chance that they could beat them. But I said, I have absolutely no idea what the market's reaction is going to be to it. And here we go again. It's down $20 and they had record earnings. That happened a couple times last week, right? Netflix. I don't know. There's a couple big ones where they got whacked on blowout earnings. Intel had earnings last week, got whacked. Hey, Eric, your drop down, and I'm not sure what $8 means. Let's see that we were talking about a couple of these the other day as being possible V bottoms. It's not a true bottoming pattern that we like that take a couple weeks to develop with the 20 MA flattening out. But this was a V bottom, and then you had a bullish 15-minute entry. There was another one here. It's in my list here. I'll get to it. But now it's blasting pre-market here, so there's nothing to do with it. Greg, look at GME. We were talking about bottoming patterns yesterday. Look at this. It had a beautiful day yesterday.
Yeah.
And
AMC, what's that? I haven't looked this morning, but that certainly looked like it was going to go higher.
Yeah, I talked about it a few moments ago. Yeah, I posted it as a new put spread and also told our Telegram folks that were watching it. Diego Mara. I think we can find better. I mean, I do like the gap reversal, and you do have a price void, but you got this ugly 15-minute reversal here. I think we can find better. This was the other one I said, V bottom. We were looking at this yesterday. And somebody asked me yesterday in the green room, hey, Dan, is this what you call a novice breakout? And I said, no, it is a breakout. It's one that, you know, we don't buy breakouts from the bottom to the top of the range, but this was a wide range, powerful power bar right here. And it was just a continuation of it. Now it's gapping up a little more, but unless you get a day trade set up, there's no pattern there in the daily. Right here, it shows it gapping up 230, but I don't trust these prints in my minder if I don't see them. So I have no idea what this earnings stock is doing. SBAC, same, see? I don't see any prints. Unless, all right, see now this one down $7. I see prints here, 137. McGraw, I like this one a lot for a call spread. I'm going to put that because it's a shock pattern under a green bar. So I like this a lot, and it has a price void. Even day trade, you know, maybe 132. You know, the breakout area, 133, whatever. But gapping under this 30-minute low, call spread. You got to go through our checklist, obviously. Mixie made the turn here at the 50. I can't tell where it's gapping. We'll come back to you. A semiconductor making the turn here at the 50. We were going to buy this yesterday, but for earnings, that's a nice pattern. We did get into AMAT. AMAT here making the turn, so we're long stock and have a put spread. UHS shows it down $2. I don't see anything, and I don't like the way you trade. You're going Massey. We'll come back. I don't see any prints. Lilly was down 7, 182.60. So bearish gap, but on support, we'll come back to you. WRI, that's a powerful uptrend right there. You know, this big gap with no tail, closing at the high, not retracing into 50% of that. That's a beast. Look, I had FSIV on my long watches. I must have lost my pre-market. I do not. Oh, FSIV, that's why. No, never mind. This was also on my long list, but it has earnings this week. It's FISV. I see it was gapping up to 128, so it was a gap breakout. And now they're probably blabbing in a conference call and it's giving it up. So now my bullish bias is not bullish anymore. Yeah, that's up $10, Jake. I have absolutely no idea what you want me to do with it. There's there's nothing to do on the daily. CDNS. No, we would do the 145. The 145 as it sets up, McGraw, because the stop is over yesterday's high. But remember, we still, and looking at the quotes now are going to be 100% meaningless because they're of the vol crush here on the announcement. AMP, what we call it, churning uptrend. Here's a gap breakout, but percentage-wise, the gap's too big for me, but we'll keep an eye on it. NVIDIA, yeah, I said you could do a put spread under the week's low, although there's other semis reporting, but it's a strong uptrend, sure. You should be able to get a day trade out of that. Semis up, we sold a put spread on SMH yesterday. Lemonade. Bottoming pattern. Yep, I'm Rita, I'm not sure what you want to do with it. You need to ask me. But what jumps out at me is a bottoming pattern. And long. All right, well, it's up 1, 2, 3, 4 bars. It does look higher. At a market's iffy. The diamonds are starting the opening print on a downtick. So I don't know. Put it in a 5-minute chart and keep an eye on it. Maybe 15-minute high if the market's holding. I don't know. Bossum, to me, it's a visual thing. I don't have a rule of thumb. But let's talk about that later in more